Welcome to the 2024 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this Sunday, June 16, 2024 edition. Happy Father's Day to all the fathers and fathers-to-be out there today. Enjoy your day. We appreciate everything that you do in our lives. And we definitely are looking forward to celebrating with you later on today. Now, we are going to be talking about the economic impacts of the inflation that is continuing to rage its head in many ways. And we're also going to be talking about unemployment claims, which is rising. But in spite of the doom and gloom, there are companies that are making record profits. There are individuals that are making profits in the stock market or outside the stock market. So everything, some people are still shopping. Some people still have money. The 1% in all of the 50 states are still shopping, albeit to a lesser extent. So money is changing hands. The velocity of money is slowing down. But however, unemployment claims and inflation is big concerns heading into this summertime here. 3 days away from summer, starting officially here in the Northern Hemisphere. And so this is what we have. So let's get right into it. So we have unemployment claims in Virginia increased last week. And now, you know, the national unemployment rate is ticking towards 4% and higher right now. We know real unemployment is at 15%. But by the official BLS, Bureau of Labor Statistics numbers, we're at 4%. Inflation numbers. So initial filings for unemployment benefits in Virginia rose last week compared to the week prior. New jobless claims, these are initial jobless claims, increased to 2,399 in the week ending June 8. That's up from 1998 from the previous week. Now, ladies and gentlemen, this is not to bring doom and gloom, but, you know, this is the type of unemployment that is slow and steadily increasing. It's not just going to all of a sudden, you know, they're going to hand out pink slips to everybody. It was just like the tech sector last year when the stock earnings didn't match, and some of the big Magnificent Seven companies like Google and Apple and Facebook, they started to trim they started to trim some of the unneeded positions higher up. Most of the higher up, you know, like the white collar higher up positions, they started to trim those down. So this is what this unemployment is going to be. It's going to be a slow trickle at first. And then it's going to be a steady trickle. You know, oh boy, we're getting every so much. We're getting a couple thousand here, a couple thousand. And then all of a sudden the floodgates are going to open. And that's what's going to happen in all of these states. Every state is going to feel this because the fact of the matter is that, you know, we just don't have we have a lot of phantom jobs out there, jobs that are listings, the postings, you put in applications, but you don't hear back from them, or, you know, they just collecting a database of jobs, you know, of job applications, and not actually filling a lot of these positions, despite the retirement things that people, you know, saying there's all these baby boomers retiring, and they're not filling them. They're getting robots and AI to replace it and other means. So, so the conditions for rate cut emerged in South Korea. This was interesting. This is on investing.com, says presidential officials. So, you know, they're thinking about rate cutting around the world. You know, central banks around the world follow each other, and they're saying that the rate cuts in South Korea may be coming sooner rather than later. Now, we know that the rate cut in the U.S. could be possibly coming, quote unquote, in November, December time frame. But most people are counting on one rate cut this year, according to several reports. Now, but South Korea's inflation slowed for a second month. The same thing that they've been reporting over here, that our U.S. inflation slowed, albeit it's still persistent. But, you know, so we have to look at that and say the media is spending it one way, but we're looking at it now. It's the slowest annual increase. But the fact of the matter is that even though it's slowing, it's still increasing. That's the key word that I want to get to you, ladies and gentlemen, is that inflation is slowing around the world, but it's still increasing around the world. So oil companies are raking in record profits according under Joe Biden. You can see Joe Biden, you know, he had this thing, he stopped the pipeline when he came in, and the oil companies are saying that, you know, they're raking in record profits under Joe Biden. So, and that is because, you know, why is that? You know, why are they raking it? This is CNN Business. This is a national report here that was published this week. So you can see that the gas industry has thrived under the current president. You know, gas production is up, oil profits are up, they're broken records. You know, ExxonMobil, Chevron, if you own stocks in any of that, ConocoPhillips, you know, Schollenberger have raked in more than $250 billion in profits between 2021 and 2023. Remember that was during the pandemic, the sickness thing. So that's 100%, 60% jump in the first 3 years. Compared to the first 3 years of the pro-big oil Trump administration. That's according to CNN's calculations. It's not anything recent, anything verifiable, but this is CNN's calculations. So Oil executives and shareholders got a boom. As you can see here, U.S. produced more crude oil than ever in 2023. And, you know, at one point we were tapping into the strategic reserves and the prices were going up. You remember gas was getting close to $4 a gallon nationally on you know, for regular unleaded. But now they still got profits because they've been splitting stock and doing a bunch of other stuff, you know. They've been doing a lot of acquisitions here. As you see, Marathon Oil, ConocoPhillips said they'd take Marathon Oil at a deal valued at $22.5 billion. You know, so these companies are still making a lot of money. Regardless, they're going to make their money regardless of who's in office, you know, what's going on politically. Oil companies are going to make their money, you know what I'm saying? So that's what's really happening here. So, quote, despite his mixed record with oil and gas companies, though, President Biden has presided over a historical run for the industry. This is what Closer said, one of the experts said. The oil industry in general, and this is true from the wellhead to the refinery to the gas pump, is much more prosperous in the last 10 years than it was in any other 10-year period. It's just been a renaissance. So, this is going to be interesting to see the pushback, ladies and gentlemen, between the oil companies' record profits and these EV companies that are slowly coming up and getting people to force people to buy these EV cars or hybrid cars. It's going to be an interesting battle to see in the next 3 years here. So, if interest rates continue, if interest rates may need to rise, this is an opinion piece on MarketWatch.com, if the Fed wants to target inflation rate at 2%. So, you know, they're facing a quagmire here as we head into the summer and the fall. Most people are saying, experts are saying one cut, but they may end up raising rates. You know, that would be just catastrophic for this economy. If they raise it 25 basis points instead of lowering it 25 basis points in November, December, with all the experts expecting that, that would just destroy the stock market. I mean, the stock market would be going down by like 20-30% easily before the end of this year if they do that. But it is possible, ladies and gentlemen. But at the same time, it's possible that they, you know, defy all expectations to give a 50 basis point rate cut. Then we're going to see everything soar, all assets soar, Bitcoin, you know, gold, silver, cryptos, you know, dollar's going to go up, everything's going to go up, and that's going to signal to the markets and to everyone else that this dollar is just not as strong. However, you know, they're going to print up more money and make things work, keep the merry-go-round going until the end of 2025. So we have a lot to see here. We have a lot to look forward to this summer. The main thing is to get prepared. Only buy essentials that you need for your family, your friends, cohorts, chums. You know, get some training and you know, and skills. And that's always going to be with you through the good times and bad times. You know, I'm not a doom gloom person. I think that this economy is doing quite well considering all of the headwinds that it's faced so far these last 6 months of the 2024. You know, and all of the extra stuff that's going on around the world. This economy's done quite well. But like I said, we do have those headwinds coming. And that's the main thing is going to be unemployment, and can wages outpace inflation for the common average American, not for the 1%. And that's going to be the key in determining whether or not we enter a double dip recession or whether we enter another booming economy under the next presidential administration. Let me know what you think in the comments. God bless. I'll talk to you very soon. Thank you for listening to me.